Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be doing a bit of on-chain analysis. In this video, we're going to be discussing the HODL Waves. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, get access to these charts. Let's go to jump in. So we've talked a lot about social interest in the cryptoverse and whether retail is coming back or not. Obviously, there has been an influx of some new investors, right? You can see that in the social risk. We talked about that yesterday. But this is another way to sort of view what investors are doing, what they're thinking. And this is the Bitcoin HODL waves or HODL waves, whichever you prefer. And these bands basically just reflect the percentage of supply that has been unused in a transaction for a certain period of time. So if we wanted to know the percentage of Bitcoin, right, that, being held by addresses for less than a day, it's relatively low, right? It's relatively low. But one of the things that can be interesting to do is to break these up into different categories. You could look, of course, at say the 2 year to 3 year and find some pretty interesting trends on there. Um, One of the things you'll notice is that, in 2016 there was a major top in this metric, and then it went down, right? And as it went down, the peak eventually occurred. And then once the peak was in, it then was flat for a while, right? It was flat for a while. The next cycle was slightly different, where it went up, kind of the same thing as over here, right? It went up and then it came back down. And this was that weird sort of double peak cycle. So it was flat for a little bit, and then it dropped off again just after the second peak, and then was flat again. So it's really interesting sort of see that pattern play out. Um, so obviously we've had sort of that first move there. One of the things about this, though, it's only really beneficial in hindsight. During the middle of it, it's really hard to know exactly where that low is. But what I want to do is talk a little bit about short-term holders and long-term holders. So short-term holders in this case is identified by anyone holding Bitcoin for 6 months or less. And you can see that at major tops, there is a surge in short-term holders. You can see there was also a surge earlier this year, and then it fell off once again as we got into, sort of the dog days of summer. With this recent surge in retail interest, you can in fact see that short-term HODL waves have started to go back up. So this is clear evidence that there are some people coming back. And I think that's fairly well reflected here. Now, it's not as high as it was back over here in March and April, but it has been trending up really ever since the beginning of October. This metric has been trending up. If you look at the reverse of that, right, if you look at long-term HODL waves, what you'll notice is that they tend to drop a lot into major peaks, right? So as you get these major blow-off tops, the long-term HODL waves tend to drop off a lot. And then they start to go back up after the peak is in. You can see something happen last cycle as well, right? It dropped off a lot going into that peak. And then this is sort of more evidence that the first top was the more significant top, because after that it went up just like it normally does after the top is in. We also saw a pretty big drop, in fact, in March and into April. And you can see that it dropped a lot, it then leveled off, and then it started to go back up again. What's really interesting in this case, right, is if you go back and look at 2013, you'll see something kind of similar, right, where you have sort of that first drop, and then it goes back up, and then it's sort of a second drop. I almost wonder if we're seeing something like that happen right now. That would be a relatively interesting view of the market to see if it does play out in the same way. But I just wanted to show you guys this metric. I think it's useful. We don't talk about it a lot, and one of the reasons is because it doesn't really do anything. for large portions of the cycle, right? I mean, for years, it essentially does nothing. And then every once in a while, you will see some movement in it. And so I at least wanted to present it to you guys. But we'll keep this video rather short and sweet. Obviously, some of the videos are longer, and I want to make some of them a little bit shorter so that we're not here for too long. But anyways, if you guys like the content, make sure you subscribe, give the video a thumbs up. And again, we do have these charts available at intothecryptoverse.com. We do have the sale going on. Make sure you check it out. We don't only have it for Bitcoin, all these charts that you see on-chain stuff, but we also have it for several other cryptocurrencies as well. So you could look at the same thing for an asset like Ethereum if you wanted to. And you could go through the different assets to see, what are the long-term holders doing, what are the short-term holders doing, and see if you can find any really, really interesting trends. But anyways, guys, we're going to go ahead and wrap it up there. Thank you guys for tuning in. Subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.